Hey guys, welcome into the live stream today. We're going to be, of course, streaming Chair Powell. No introductions necessary. We're going to cut right to the feed. He is just coming on. So let's take a look, guys.
While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the Summary of Economic Projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions.
People don't know what to do.
Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Thank you, Chairman Powell. Our first session of the day is reassessing economic constraints, maximum employment. We will hear first from Nicola Fuchs.
All right, so what you're going to see, I think, today, guys, is, of course, obviously several sessions that will be playing throughout. And I think with what Powell has said so far, some of the things that are playing into this is really kind of something I was putting out even on Twitter earlier this morning. And if you kind of go to my tweet stream right here, I was really kind of getting to the points of the Fed meeting. What they really need to do is make sure they don't blink. It sounds to me like he is leaning in a little bit more hawkish than many people had anticipated. But I'm still in the camp that they're going to have to put some pressure on. Whether they go to the 75 basis points here in September is still kind of up for grabs, but I think there's a lot of scenarios that are going to play into this. Managing this critical level right now is very interesting because you've got not only the scenario happening with mixed data coming in. We saw the CPE come in this morning. A little bit about that in a second, but you've got mixed data coming in. You also have another print coming up in early September, which will really be, I think, going to be one of the critical points, and that is the CPI data coming in early September. All of that is going to be, the question mark will be, will they have enough data to really make into a real decision on whether we're going to see a 50 or a 75. I think he did sound bullish, to your point, William, when you guys are throwing up some comments there. I agree. This is a bullish. This is kind of what we expected. I don't anticipate and was not anticipating that they would be doing anything to pull off the measure right now. If you look at some of just the early stories, let's go over here to Bloomberg. We'll get to this one right here. Obviously, stocks also have kind of dropped a little bit. I think there's been a lot of people looking toward this 50 basis point hike, which has really been the one that everybody's been hoping for. I guess if you could hope for something. But remember, there's been 3 consecutive rises on the interest rate. This would be obviously the 4th. And remember, it's kind of interesting that they're doing this in Jackson Hole, because Jackson Hole was kind of funny. That was where Volcker actually moved the Fed meeting. And Volcker was the last chairman to really accelerate and deal with extremely high inflation. Remember also, when Volcker was the chair, is that we scored and measured inflation and a lot of these indexes in completely different ways. So there's quite a bit of difference there, but it's kind of interesting that they're kind of coming back to that point. Another thing too, I wanted to kind of jump to, right now, and that is looking at just U.S. income, spending, post-sluggish gains, even inflation easing, all that kind of coming in. There's a few more things happening, I think, from today's news is whether or not we see the adjustment. Obviously it just climbed to 0.02% after a flat June, but the PC index, that's the one that fell, and I think that's the scenario that everybody's looking at. As you can see here on the charts, we're kind of throwing up some different charts here. I think that's ETH. And down, obviously, immediately when there was a little bit of indicator that the chair was looking at a little bit more resolve in terms of holding. And this is, I think, still the scenario is a lot of people have been talking about what should he do. And the reality is, I think a lot of people would agree that they do not need to pull off the pressure. The pressure is really significant. Remember, this time last year was when the Fed did the last meeting where they were completely off the mark. And that is, I think, also weighing in their mind in the sense that they're trying to gain trust, not only from the markets, but also, I think, in general from the American people. It's ironic that we even know who the chairman's name is, because typically the Fed works in the shadows and has been one of those scenarios that it really hasn't played into, culture, especially investing culture. Sure, most of Wall Street will track it, but now we're starting to see this into almost everyday investor, especially on the retail side of things. And if you look at just where Bitcoin has been going, and I want to also take a look. Remember, this has been going slightly up. The market was slightly up. Here was the power index on Bitcoin, slightly up yesterday. Obviously, Bitcoin and Ethereum had been on a little bit of claim of a rise. We'll take another sentiment reading today. We drop our Friday sentiment. That'll probably be dropped around noon today. And the question will be, will the markets react with positive sentiment going forward into what I think is going to still be a hawkish, though not necessarily stressed position? The things that I would be watching for, and this is something that we talk about here on the show a lot, is right now we're looking for job numbers. We'll also be looking for the housing news as we continue to see most likely a slowdown. If the Fed is getting this kind of data coming in and we get the new CPI, question will be, I think the real early indicator here will be the CPI print in September for August. That will be one of the critical factors, because obviously we know that the lagging data both on jobs and also on housing most likely will start to come in. And in many cases, I think some of that might be priced into the market as it is right now. So this will be a very, very hot topic to watch in September, going up to, I think it's the 26th is the meeting for what's happening. And I think that's going to be the big point is, do we see a 50 basis points? I'd love to kind of get you guys' feedback. I know we've got a poll coming up here too, but I'd love to get your feedback on where you think the basis points are going to go. But right now, will crypto pump or dump immediately after the speech? Looks like everybody's saying it's going to pump. Let's jump back to the charts real quick and see. Let's take a look at Bitcoin. We got one of the guys, that's Ethereum. Let's run over to Bitcoin. And it should be right there. Yeah. All right. So we've got, man, look at this chart. It's just absolutely all over the place. And I think this is the thing. When you have a statement like what Powell has been kind of alluding to, is this was, in my opinion, hawkish, but also not a lot of decisions on how this might move forward. My question is going to be this. If we look at remember, they've been congregating there for a couple of days now and really doing nothing but, because if you're in Jackson Hole, I don't know if you've ever seen the resort that they do this at, this is not, a super luxury. This is like cabins and cottages, and it's a very small, and the design behind it means a lot of conversations. So for the fact that they've had this much conversation and most likely a certain amount of data that has been coming into this, the fact that he kept it short, also kept it somewhat leaning to a hawkish look, this tells me that we could be looking for a little bit stronger position from the Fed. Now, could a 75 play into this? I just don't know. But September is going to be a very interesting month for sure. I know you guys have some questions. We'll try to get to some of those as well and take a look at any late breaking news that is coming in. But it looks like everything has kind of been coming in off of what the overall inflation and slowing on price indexes have been at least for the last day or two. So I think this will obviously play into it. I want to take a look at Ethereum also, because this is another one that, let's go back over here and we'll jump up to Ethereum. Ethereum, as you guys know, we talked about this yesterday, was on a slow climb right here. Let's jump over to the live chart, and there's the sentiment from yesterday and Wednesday coming up, and then we'll get a chance to see this. So you see there on the right-hand side, that climb over that last, I think that's the 4 hour, or is that the hourly, or what's he running on right there? Looks like, okay, he's on the 15. Okay, so you can kind of see that climb that was occurring with Ethereum, and then we started to see a little bit of that fall off there overnight on trading, and then back down to 16. So remember, this had clipped over 17 at time that we were doing the show just the other day and talking about this very issue. So I think it's going to be interesting to see how the markets react, because right now what you're seeing, I think, is a lot of uncertainty, obviously in crypto, because people are saying, I think there were some early sell-offs right there. You can kind of see it on both the charts, both Bitcoin and also on Ethereum. Early sell-off, then people coming in and saying, wait a minute, I'm going to go ahead and buy that dip, grab a little bit of that and get back on it. And I think this is the scenario that we're going to be reporting on throughout September. We'll talk quite a bit. We'll also have some market analysts on. We're going to dive in deep with several new analysts this coming next 2 weeks. We'll also have Gareth on. We've got Darius Dale coming on. There's going to be quite a bit happening in terms of just where the market pressures are going to be going. And again, consumer sentiment is going to be very, very selective in the sense that I think right now we are dealing with a little bit of a kind of a no man's land right now between now and early September when we do get the CPI print. And I do want to go to just a few questions that you guys might have. So feel free to drop them in the sidebar. Also, make sure and smash the like button, because if you like us doing these live streams, prepping these things up, doing some commentary, maybe bringing you a little bit of data that is coming from our own power index. We'll try to get to some of these. So some of these, let's go into, will we get to the 14K BTC? Now, remember, one of the things that we've talked about here on the show over the past 30 days, Gareth and I were really going into this about 6 weeks ago, and Gareth is still kind of pushing in that range of a low teens or $10,000 Bitcoin. Obviously, you guys probably know my position if you've been watching us very long, is that I still feel Q3, Q4 has a lot of pressure from the S&P, mainly because we will see the Q3 and Q4 data come in from the earnings reports. And for what we'll see in terms of lagging indicators, consumer spending, most likely consumer credit, question will be how much credit is actually spent. Will we see that kind of showcase in Q4 versus Q3? Credit will come in, housing also comes in, and then jobs come in. All of that plays into kind of these earning indicators, especially some of the big tech stocks. And that, I think, will be a catalyst to but position and condition the market for a downtrend. And if we do see the heavy downtrend and continued pressure from the Fed in September, that is going to kind of set up the potential for a sub 20. And I think that's going to be the big scenario to kind of fall into this. So it's definitely going to be something for sure to watch. Let's go to another one. Paul, the other day you said it's hard to buy when you have everything going down. You haven't seen my wife. That's true, for sure. And if you're watching luxury watches, that market's going down as well. How do you think what we should expect for on the elections? I think what we're going to deal with right now, September is very key here, because remember, you got September and then you're literally 40 days away from a midterm. And if September comes in on the 75, if anything, it makes me think that we would get the 50, because at least it's going down from the previous hard prints that we've seen on the 275s and then the 50. And I think if we can get another 50, it could give at least the Democrats a little bit of position that they've been able to slow inflation and that the market is in the route for correction. The problem, I think, will be how this plays out for sure in terms of the CPI. CPI for September, August is going to be a big one for sure. Let's go into another one. Q4 is all-time highs. Does that mean Q will be mostly inflationary? remember Q4 last year, completely different scenario. What we did not have, remember when the Fed went on record and really missed the boat. I think that was where a lot of people looked at the Fed this year and really kind of lost a lot of faith in them because they missed it. So they did not start tightening much earlier. We would not have seen the kind of Q4 that we saw had the Fed actually done what was required to keep us out of this position. Now, granted, there's a lot of global economic scenarios that play into this, and I think that's going to be a factor, going forward for at least the near future. Keep your eyes on open and fund safe. We might see another Celsius-like case with big crypto exchanges. That's going to be another scenario, I think, also because with the fact that we are going to be looking at scenarios where liquidity is going to be needed, and you still have a lot of people that are doing, really doing self-custody. And I think if you're following our channel, you know how much I am a big proponent of self-custody. I still believe that should be the number one location that you're doing it in, unless you are prepping for a trade in which you would move your tokens onto, exchange to set it up. Will the ETH merge still happen? So far, so good. But again, I'm always optimistically skeptical on whether or not that date actually gets hit. The fact that we are not seeing the charts respond right now with what's happened this morning of kind of that light speech from Chair Powell, I think this is still meaning that the markets are kind of up for grab. Could go one way or another. Really depends on the sentiment of investors trying to close out August and also prepping for a pre-CPI, because that's going to be the next big scenario. Question should rather be ETH merge can overtake all the macro FUD. I do not believe it can. This is something that I actually mentioned on the show the other day, is even though the merge could happen, the likelihood of it blasting through the macro FUD that's coming in from all over. Remember, we are moving into September, October, which is going to be a big problem for Europe, especially Germany. And the issue of gas, that's going to play a big economic role in the EU. Obviously, that's going to affect the euro. Euro affects the dollar. Dollar is really going head-to-head right now with what's happening in China from a real estate aspect. There's just so many perfect storms that are in play right now. I don't know if you ever guys have watched that movie, but when you see all those things kind of swirling, there is a point where these things intersect, and that is going to be the problem. Coinbase wrapped ETH, you can custody and earn, scammer smart. Listen, I'm not doing anything with ETH right now in terms of trying to do any yield acquisition because of the uncertainty with the merge. And one little misstep could really cause ETH some big problems. And that, I think, a lot of people are realizing right now. Ripple is about to pump soon. XRP is moving in accordance. I don't know. I haven't seen any movement on XRP. We'll take a look today on the Sentinel. We will be dropping our CPI, as I said, today on our Friday drop. Mary Black, Bitcoin 12.5 whenever BlackRock, Fortress, and Mt. Gox dump. May see it. Remember, Bitcoin ran up to 25, almost a little over 25 in this kind of short rally. That's a big opportunity for someone that had bought in at 17 and 18 and even 19 on that recent dump. So could be some plays on that for liquidity. The question will be, though, is if we can see Bitcoin kind of move back up. Last point there, I want to take a look back at the Bitcoin chart if we've got it up there. If not, I can pull it up on my end right here. Yeah, all right, so Bitcoin, remember, when you look at where this one has been going, let me close that out. This little rise right here is what we've really kind of been watching over the last little bit, and this adjustment right now is still downtrend. This is going to be very interesting on these sentiment data points coming in. Is this a short-lived downtrend, or do we see some flattening? We might see a sub 20 come in here, especially on the weekend. Remember, trading on the weekend gets really interesting, so we're watching that very good. Andrew, is sand good for a long term? Listen, I am a sand holder. You guys hear me. I don't shill it, but I will tell you this. I hold sand long term. When I say long term, I am looking for a rise, and then I would exit the position because it is an altcoin that I constantly trade in and out of. Same thing with other projects like that. Gala, I do the same thing. Axie, if you're into some of those metaverse and gaming tokens. But I also do this with altcoins. Just did a big trade on Cosmos this week. I've done some trades on Avalanche over the last month. We've had several of those kind of things happening. So lots happening. Make sure and stay tuned. We're going to have a 1 o'clock live stream for you, I believe, today with the founder of Sandbox. And we'll get a chance to talk to him about kind of the future of the metaverse, but also the future of where Sandbox is going. Make sure and hit your notify button there on the YouTube channel so you can get notified of that live stream. Also, if you guys have not jumped into the Diamond Circle, this is one of the other areas where we notify you of stuff that we're doing on the channel. Sometimes we do it with AMAs. I also am starting wrapping up more content to flow into that. So make sure and just join the Diamond Circle as well. Last up, before we get out of here, we'll take a poll and then we'll bail out. Which crypto will pump or dump immediately after speech? Yeah, will crypto pump or dump? Man, this is split. This is exactly my point right here. Is this didn't tell us anything. If anything, it tells me negative, but he's waiting for maybe that additional data set. Maybe at the end case, that's what they were waiting on, is more data to resolve, and it just hasn't really done it to the point to where Fed. Remember, the Fed is trying to get back down to a 2% inflation. Personally, I think that never happens. Again, if we'll be lucky if we see a 4% inflation normalize, and I think that may be the new era of where standard inflation will be, and that in itself will start to change the markets in a big way, especially in the long-term Treasury bonds and yields that will be playing into the Dixie and so on. So there's so many things that could be playing into this. As I said, we will be having a lot of guests on, a lot of macro analysts as well as futurists that are looking at kind of where the global economy is going, because I think now we are at a point where what's happening in Europe, what's happening in China is very seriously close to what's going to happen right now within the U.S. So, and again, if you look at the United States, and you guys know my position on this, I think we're in a lot worse position than Europe and even China right now, just because of the manufacturing prowess that China has, what supply chain is going to look like. So much to talk about on that. We'll definitely do an episode on that to kind of break down why this is good for crypto and why it could be really good, especially I think for Bitcoin and ETH. If you guys want to catch me, it is out there on Twitter. We'll catch you next time right here on TechPath.